Hi everyone, it's Pete Boehm here, CEO of Our Home Sweet Home. I've had a lot of people come up and ask me, Pete, should I be looking at a fixed rate loan or a variable rate loan? And I say to them, it depends on why you're looking at the fixed rate loan. Fixed rate loans offer some pretty good advantages and some benefits. For example, one of the key benefits they offer is a form of financial and emotional security that your weekly, fortnightly or monthly home loan repayments are going to stay the same throughout the term of your loan. Now, that's pretty good if you're worried about managing your finances, if you're a first-time buyer, not used to home loans, and it also helps you in your budgeting and financial management. On the downside, fixed rate loans offer less flexibility than variable rate loans. For example, it's more difficult to make extra repayments or lump sum payments, and if for whatever reason you find that you need to settle out of your fixed rate loan earlier than expected, you could be up for thousands, if not tens of thousands of dollars worth of interest rate charges. So that's certainly a big consideration. I think one of the key things to bear in mind is the pricing of fixed rate loans and what it represents. It represents the market's view on where interest rates are going to be in the future. So if the market thinks that rates are going to be on the way up, then the fixed rate loan will be more expensive. If they think that rates are on the way down, then it will typically be more cheaper than a variable rate loan. So what does this mean for you? Well, it means that if you take out a fixed rate loan and the variable rates are higher than your pricing, your fixed rate pricing, then you're going to save money. However, if the variable rate loans come in under your fixed rate product, then it's going to cost you more money. Now, a lot of people use fixed rate loans as a way of saving money. So they're taking a bit of a risk, a bit of a gamble. And I think that's a bit dangerous. Why? The main reason is that nobody really knows where interest rates are going and how quickly they're going to get there. If you go back a year or so, just before the GFC hit, the Reserve Bank was increasing interest rates every month and people started to get worried, and a lot of people took out fixed rate loans because they thought interest rates were going to continue to go up. Then the GFC hit, and lo and behold, we're at the lowest level of interest rates for a couple of generations, and there are a lot of people out there that are hurting at the moment because they took out a fixed rate loan. So look, it's really difficult for the experts to pick the direction of interest rates, let alone the likes of you and I. So in terms of taking out a fixed rate loan, I think the compelling reason is to provide for repayment certainty rather than to save you money. So if a fixed rate loan is the way to go, then these are the things to think about. The first one is be really certain why you're taking it out. And as I said, I think it's a case of repayment certainty rather than money saving. The second thing is you should get the lender to explain what would happen if you needed to settle out of the loan earlier. I think it's a really good idea for them to give you an example of how much you would have to pay if, say for example, you took out a 5-year loan and for whatever reason you needed to settle after 2 years. Get them to let you know how much it was going to cost you to get out of that loan. And the final thing is, look, it can take 2-3 months for you to have your loan approved. So it's always a good idea, if you're going for a fixed rate loan, to get an undertaking from the lender that they're going to honour the rate while they're underwriting your home loan. So hope you found that interesting, and until we meet again, thanks a lot. Bye.